earnings would be center stage. Pankaj Pandey joins in with his thoughts. Pankaj, good having you. Thanks much for taking the time out and speaking to us here. IT kicks off the earnings season within Wipro and TCS slated to come out over the next couple of days. What do you anticipate after what Cognizant has done? Do you reckon anything in the results or the commentary can heave a positive surprise for the IT names?
So, good morning, Neeraj. I think on the IT side, for example, for Wipro, we expect that the company would grow its revenues on a flattish basis. So quarter on quarter, we are not expecting much of a growth, and then we'll have a currency headwind of 0.2 odd percent. So rupee revenues though might grow at 1.2 odd percent. Margins could also expand. But I think the only or the bigger challenge is that we still don't know any. In fact, we are not very sure whether the companies will be able to guide in this particular quarter, because at client level disruption can obviously will be the biggest concern. I think it's still sort of early days in terms of figuring out the kind of damage it will do. But only thing is that some of the IT names, especially on the defensive side, for example, Wipro and even for example, Tech Mahindra have are available below 10 times P. So which is where I think, given that most of the IT companies have got a good balance sheet, so for them, I think if, navigating through these challenging times would be relatively better than a lot of other packs. So from that perspective, IT can be looked at, and Wipro and again Tech Mahindra, we have a buy rating largely because the valuations are sub-10.
Okay. When you start off with the earnings season this time, Pankaj, where is it that you're expecting most damage?
So I think this particular quarter, we will not see the extent of damage. What we have seen or what our sense is that except for FMCG and pharma, wherein we are not expecting damage to happen. In fact, even for next 2 years, these are the only two sectors where you'll see growth happening. I think the rest of the other sectors, we are sort of penciling in a single-digit kind of a decline in overall earnings. Now, for a sector like, say, multiplexes, real estate, or construction-related sectors, I think the challenge will not be there on the earnings. One has to sort of really focus on what happens in terms of their cash flows. Because our sense is that a lot of big companies are sort of stepping up their efforts in terms of showing liquidity. Now, worker is something which you cannot sort of touch because of the government. I think that. So from that perspective, the only option available for them is to sort of lower or reduce vendor payments. I think that will be a bigger challenge which one needs to sort of watch out. So PNL definitely is going to get disrupted for a number of players, but I think it is on the balance sheet one has to sort of clearly focus on for the next 3 to 6 months in terms of what kind of liquidity mismatch can happen. And I think all these sectors will witness some bit of a liquidity mismatch. The extent is yet not known.
All right. Lots more to talk to you, Pankaj, but it's also important to get in a sense of all the stocks that we're watching out for this morning. We missed out on trade yesterday. A lot of news flow. Nikki is joining in right now to run us through all the various stocks and news. Good morning, Nikki.
Morning, Devi. I'm going to start off with Metropolis Healthcare, where Carlyle is looking to sell around 65.5 lakh shares via block deal. This could be around 13% equity stake that could be exchanged. Overall, as per the December shareholding pattern, it's a 14.8% stake that Carlyle held in Metropolis Healthcare. The floor price has been set at a 17% discount as compared to the previous market price. We're also looking at a bunch of other diagnostic stocks like Thyrocare and Dr. Lal Path Labs after Supreme Court decided that the testing in private for COVID will only be free for poor. This was way against what people thought, that it's going to be free across the board, but now it's clarified that it will only be extended to the one which are economically weak. And we're also looking at aviation stocks right now. Pain continues for these stocks. Said that all domestic and international scheduled airline operations shall remain suspended in tune with the nationwide lockdown, which has been extended till May 3rd. We're also looking at IRCTC, where a railway ministry has said that cancellation of passenger train services has been extended to May 3rd, and the full refunds of fare fares shall be arranged to the passengers. So do keep an eye out on this one. And last in the list is Hindalco Industries, where finally the deal for Aleris acquisition has been completed by the subsidiary Novalis. However, in a bit of turn, the enterprise value of the deal has come up to an extent of $2.5 billion, which is a tad higher than what was estimated. Sorry, the enterprise value is $2.8 billion against 2.6, which was guided earlier. Essentially, it's on account of higher debt and also because of the combination of Aleris doing better than what was expected. And on account of that, the company has paid a performance-related incentive, which is now combined in the overall enterprise value. However, analysts don't make much out of it. They say that it's a good acquisition at this point of time, but at a very wrong time.
Yeah, Nikki, thanks so much for that. Those are the stocks in news, and some stories around these, particularly the Hindalco deal, would be there on our website as well. So do try and log in and read more about that. Pankaj, coming on the usual suspects, the blanket view would be that aviation stocks come airport stocks should be avoided right now. They've come off quite a bit, but the lockdowns keep on getting extended. People's choices of traveling might keep on getting extended. If you have them in your portfolio, would you exit? Would you advise exiting aviation stroke airport stocks?
So I think, Neeraj, on the aviation side, one is the immediate impact what they have taken. And I think the other aspect is that if in case the social distancing norms are in place post lifting of the lockdown, I think the entire business model needs to be sort of reworked, whether with a lower PLF or whether with a lower capacity utilization can the companies charge higher and sort of maintain. So I think that's a big question mark. So from that perspective, aviation is something which have never been positive, and I think even with the current scenario also we will not be chasing. And in fact, somebody is holding. I think the advice would be to sort of exit. Largely because one, the government's support is still not there at this point in time because operating cost plus the aviation turbine fuel cost is still high. And in case of the government, especially state governments, do not cut the aviation turbine taxes, then I think the challenge for a sector like this will be far more. So you will have both P&L as well as balance sheet challenges for the entire sector. So my advice again would be to sort of exit these sectors.
Okay. Well, what to do then in a scenario like this? That's the question. Let's get in our experts on board to talk about the trade. Chandan Tapadia to kickstart the proceedings. Chandan, good having you. Thanks much for taking the time out. What's your strategy today, Chandan? I reckon the last time that we spoke, you mentioned that you see a move towards 9,500. We'll start off about a couple of 100 points higher, maybe. What do you do post that?
Yeah, very good morning. Yes, the way market has taken support at 7,500 and the volatility fell down sharply from its recent swing high of 86.60. We were expecting Nifty to head to us to 9,400 zone. And from last 4 trading sessions, the market is making it the higher lows. Even on the last trading session, it remained lower by 1.3%, but managed to respect its multiple support of 88 zone and forming higher lows from last 4 trading session. Technically, the index has formed an inside bar as from last 2 trading session. It has been trading inside the previous trading range. So that indicates some sort of consolidation breakout could be seen in the market. And that's why now the support for the Nifty index is shifting to 88. And upside, we are expecting a move towards 9,300 to 9,500 zone. And for similarly, Bank Nifty, however, that is still lower than the previous swing low. But 19,100 is the support, and because of this support, the Bank Nifty can head towards 20,300 and then measure medium-term hurdle of 21,300 to 21,500 zone.
Okay. What's happening about stocks, Chandan? It looks like there is much more activity if you can get the name right in terms of individually picking stocks. How would you position yourself in which sectors, which stocks?
Yeah, perfect. You must have noticed on last trading session when Nifty was down, but market bets was positive. And in last couple of weeks, we are witnessing the buying interest in most of the pharma, FMCG, and couple of sideline and the heavyweights counter. We have seen good formation of the bottom with a bullish divergence on the mechanical indicator, and short covering was also seen in many stocks. So again, it's a good market to pick the bottom down counter, which are having the overall strength kind of nature with the sectorial performance. So looking at the entire setup, we have selected to be with 2 ideas. First is buy on Bharti Airtel. The stock has given a consolidation breakout. 2 weeks back, it has negated lower top, lower bottom by formation of the inside bar on the weekly scale. 2 days back, it has given a breakout above multiple barrier of 485 and adding built up of long position by surpassing its falling supply trend line on the daily and the weekly scale. So expecting further momentum in Bharti Airtel towards 540, one can buy with a stop loss of 495. And second trade, that is buy on Lupin. We are quite bullish on most of the pharma counter, including Dr. Reddy, Biocon, Lupin, Divis Lib, and this Lupin is backing higher highs, higher lows from last 5 trading session. The stock has managed to surpass its multiple hurdle of 800, 815 zone. So small follow-up can take it to 865, 870 level. So recommending to go long on Lupin as well with a stop loss of 800 for an upside target was 870 plus kind of levels.
All right. Gaurav Bissa is also joining in right now. Gaurav, good morning to you. What is it that you are viewing in terms of daily levels on the index, and what kind of a trade would you advise?
Good morning. If you look at the Bank Nifty, then there has been 3 to 4 rejections from levels of 9120, 9130 on the spot side. And today, in all likelihood, we are going to open above these levels. And if we sustain above these levels, then there can be some more upside towards the level of 9350 to levels of 9400. That might not be happening today, but eventually. And one will have to look at those levels or review at those levels how the index pans out. For Bank Nifty, 21 levels of 20,100 has been a very strong hurdle. Again, we can see a 300, 400 points up move looking at the Nifty index as well. But whether it is sustaining above those levels, that is going to be the real question. If it indeed sustains above levels of 19,900 to 20,000 on the spot side, then yes, there is some more upside that cannot be ruled out, and we can see the levels of 20,700, 20,800 on the Bank Nifty index as well. So both are looking positive, but then again, it depends whether the question would be whether one will be getting the entry level or not. If there's a 200 point up move in first 10 minutes, then I think one will have to wait a bit. It doesn't make sense to buy after a gap opening of 200 points, but then yes, overall trend would remain a little bit positive.
Okay. And what about stocks then?
The first recommendation today would be buy on CESC. If you look at the hourly charts, the stock is on the cusp of giving a good breakout. Some amount of long positions are seen getting built. One of the stable names in the last 3-4 days. One can keep a target of 520, play with a stop loss of 494. Second would be buy on HDFC Life, where we have seen decent accumulation happening in the name. On the another stock to see a small breakout on hourly charts. One can play for targets of 500, keeping the stop loss at 470.
Those are some of the individual stocks you need to keep track of. I also want to focus on a few stocks. So now that we've got the extension of the lockdown till May 3rd, Ministry of Railways has cancelled all passenger trains. So this will definitely impact IRCTC. The stock which had actually started moving up, and you were seeing upper circuit after upper circuit. On Monday's session also, at a time when the market was down, IRCTC was up about 2.5%. What happens now, Pankaj? Are you tracking IRCTC? Aside from the fact that we spoke about aviation, what happens to this pocket?
So IRCTC, we don't have a coverage, so I will not be able to comment on that particular stock.
Okay, but nonetheless, this is going to have some amount of negative implications as well, because remember, most of them had been factoring in the lockdown lifting by the 15th of April, and now that gets extended by another 19 days. A few other stocks that I want to talk about. One, obviously, being the Moody's a downgrade on JSW Steel. They have reviewed their ratings, and the outlook has been revised to under review from stable. That's not auguring too well. And Motherson Sumi, some positive announcement there, saying in a press release that the company has not seen any change in contracts or programs. Most customers are wanting to catch up on lost production time in the coming months due to the pent-up demand. And production from China has risen to pre-COVID-19 levels. Pankaj, you track Motherson Sumi, and within the auto ancillary space, which is the best placed stock according to you?
I think Motherson Sumi, while the commentary looks encouraging, but our sense is that we still don't know the kind of challenges global economies or in fact various regions are going to face. So which is why I think the entire OEM space needs to sort of clearly avoided. I think ancillary space, sorry. On the OEM side, we've seen good amount of crack, especially in tier one names. So Hero Honda was available below 10 time P multiples and with a good balance sheet. So we had recommended a buyer on that. Then similarly, Maruti also is looking fine from the perspective that at least the balance sheet side is good. So I think the focus should be clearly on companies which have got good balance sheet in the auto side, because volume-wise, you will see a good amount of decline even in subsequent months. So pace of recovery is still sort of not very clear. I think the only way to sort of probably dissect auto sector is look at companies where the balance sheet is fine, where there cannot be much of a cash flow mismatch. So I think from that perspective, tier one OEMs look better, or in fact some of the battery players where you have a good component of B2C business. I think all those are relatively better players. I would still avoid most of the global exposure companies, especially on the auto side, whether it is a OEM or whether it is ancillary.
Pankaj, the other one that I want to talk about is Bajaj Finserv. We speak about Bajaj Finance a lot. Let's work with an assumption that the price damage is there and maybe the current year is a washout. But Finserv has come off because of one, Bajaj Finance, and two, almost all insurance companies too have taken a bit of a pullback. Do you reckon the valuation started in investors' favor because you're getting exposure to insurance and general insurance, as well as the potential upside of Bajaj Finance as and when it comes back?
So Bajaj Finserv is nearly 70% Bajaj Finance only in terms of some of the parts if you look at. See, the only comparison what we sort of do, say when you sort of compare is that say Bajaj Finance is also available at 3-time books, and you have a Kotak Bank which is also available at 3-time book. Now on the liability side, at least Kotak Bank has sort of announced encouraging growth in the deposit side. So I think from that perspective, that looks a far more better bet, because Bajaj Finance and indirectly Bajaj Finserv is still sitting on a good amount of 40 to 45% of unsecured book. Although they classify this B2C book as secured, but our sense is that in a challenging time like this book is not that kind of a secure book. So from that perspective, I think it is better to have look at tier one banks. And on the insurance side, I think you'll have players like HDFC Life or even SBI Life, wherein we had given a buy with a target price of 800. I think one needs to look at pure play insurance companies. I think those are better off in a current situation.
Okay, Pankaj, just a follow-up then. If you're willing to look at a Kotak Bank 3-times book, why not an HDFC Bank? I mean, I'm just trying to think versus the two. If somebody wants to choose, would HDFC Bank be better placed than Kotak or no?
What we have actually advised is that, see, banks have taken the maximum hit, and which is why HDFC Bank at 2-time book and Kotak at 3-time book is what one has to sort of look at within the finance space. Yeah, one needs to sort of clearly ignore the NBFC as a space. So a cocktail of finance or banks plus insurance companies and consumption names with the staples or sectors or consumption wherein we'll see some bit of a pent-up demand is what we've been recommending. So HDFC Bank definitely makes a cut.
The other thing is, while we've been seeing SBI cards and how that stock has been faltering since the time it listed, diving deep into JP Morgan Chase's numbers, they had one of the biggest increases in provisions that they've taken, and that is coming specifically from the cards business. So that tells you this probably is not just a phenomenon that is being seen for our markets, or the possibility of our market suffering because of people not being able to pay credit card bills, but it's a chunk of provisions even for US banks. So it is a big threat that comes about. And I want to talk about SBI cards with Pankaj as well, and as to what they see going forward. But I think we're just about a minute to pre-open, so let's stick with that, and then we come back to our market discussion. But the SGX Nifty, a pretty quiet start, slightly negative this morning. Looking at that, rest of Asia too has seen a slight bit of a cut. So Hang Seng is down, I think, 0.25% or 1/3%. You've got Nikkei 225 also trading in the red. Individual stocks will be in focus as we set up for trade this morning. But also watch out for the fact that we have missed one day's trade at a time when the SGX Nifty was up about 250 odd points. So may actually cover up for that in today's session. as well. So 30 seconds left to go. Watch out for Reliance. Watch out for, Bajaj Twins. Bajaj Finance was down 10% in Monday's session, whether or not there is any kind of recovery that comes back in. And then you have a few auto names, Hero MotoCorp, and there is the downgrade that has come in, and the stock could possibly react. And a bunch of other stocks, namely from the pharma pack, and how they start doing this morning. First few ticks should be up any moment now, and also currency 76.27 was the close on Monday on Monday's session. Watch out for how we set up this morning. Open on your screen 9,200, almost there, so that's a 2.5% gain. Whether or not we hold on to it is another question. But a few stocks then. Sun Pharma up about 10% the first one there. IndusInd Bank is showing you a 10% pop. GAIL is up about 10%. Hindalco is up about 10%. HDFC Limited 5% higher. Titan, which fell about 5% on Monday's session, is recovering as well. HCL Tech is up about 5%. HDFC Bank is up 4%. That's at 931. Cipla, L&T. L&T actually, quite contrary to the rest of the larger cap good names, did well in Monday's session. It was up significantly. L&T Construction also has been winning a lot of orders of late. Bajaj Finance is up 1.5%. Vedanta, Bharti Infratel, Coal India, ONGC, NTPC are all up. The only few stocks, and I think only two stocks right now which I can see in the red. One is the Bajaj Auto, which is down 3.25%, and the other is Maruti, which also is absolutely flat. There's no major change out there. And I don't think there's any major change for the currency as well, Neeraj.
Yeah, there isn't, just wanting to see 2 or 3 names because these rates will settle down. But Interglobe Aviation is down 10%. Average Supermarts looks like starting off lower, so do watch out for that as well. And do watch out for ITI, BML and the likes, because those are looking like starting off higher. But we'll wait and watch. We'll wait and see what happens to these names before we talk more. Now, before we talk about SBI Cards, just a quick thought, because Vodafone Idea is looking like starting off in the green. I wonder if there are some positives for the telcos. I think Chandan Tapari had a long call on Bharti Airtel. Gaurav Bisai, I wonder if between Bharti and Reliance, you have a long call or a positive view on either of those two.
We have seen a move coming in Bharti Airtel already, but if somebody wants to play for a positional view, then yes, there can be some more upside. It can move towards the level of 535, 540. I will have to review at those levels what kind of pattern it is forming at those levels. But the crucial point is, as long as it is trading above the levels of 500, we can see there can be a stop loss, and on the upside 535, 540 is what I would be looking in Bharti Airtel. For Reliance Industries, it can go towards the level of 1300. That is coming as a vertical cone on the point and figure charts, but the risk at these levels would not be that suitable. So for Bharti, you can have a 2% stop loss, but same cannot be set for Reliance, though the trend is positive. So in my opinion, I would go with the Bharti.
Okay. Pankaj Pandey, actually, just before we thank Pankaj Pandey, Devina, you wanted to talk to him about SBI Cards, but just wonder if there is a bit of a difference simply because the Indian consumer on the credit card side might not be as leveraged as the US consumer might, and one therefore hopes that things will not turn out to be as bad on the Indian credit card business, because otherwise HDFC Bank too has a spot of bother.
Yeah, and also the fact that penetration in the cards business is not as much in India as compared to US. They are way more in terms of the credit card penetration as well. So for them, if a bank has to actually provide for losses from the cards business, it will be much larger than India. But not to say that now with the kind of job cuts that could come about for the salaried class as well, that is a big concern. So how do they land up paying their EMIs and other consumer loans off? Even if they have card loans, how do they land up paying them off? And that is something that SBI Cards sort of spoke about in their update as well when they came out with it. But Pankaj, your quick opinion.
So I think we don't really have much of a history, but the only thing what we sort of look at is in 2008 when you had a similar kind of a crisis of confidence, the delinquencies in the credit card portfolio for a number of banks had sort of gone up. And which is where we are slightly more worried for SBI Cards, because what it will do is, one, your delinquencies will go up. There is a good chance also that the growth rates also might sort of taper off. My sense is that all that fear is not reflected in the current prices. So I would want to sort of avoid any kind of a portfolio which is sort of much more of unsecured side. whether it is in banks or whether it is an independent house under NBFC or a credit card. So from that perspective, I would still want to sort of avoid SBI cards.
Okay, avoid SBI cards. Pankaj, thanks very much for joining us. Really appreciate you taking out the time.
So much.
Devin Choksi is joining in right now. Devin, good.